I'm Kurt Shimmers. Every day, fortunes are gained and lost in the financial markets. News, trends, and even geopolitical events shape your financial landscape. Join me and my expert guests right now on Traders Nation. Welcome. You are tuned in to Traders Nation. Thanks for making us a part of your day. Whoa, Nelly, talk about the markets. We will be today, that's for sure. Jeffrey Small, he's president of Arbor Financial and author of Turning Financial Planning Right Side Up. We're going to be talking with him today about the markets. Stocks fell sharply again today, down another 600 points so far. Could it be fears over the U.S.-China trade relations? We're going to be talking with Jeff about that and see where the protection, flight to quality is, if you will. Plus, we got a couple nice sectors on our list here today. They're not affected really by the markets. Find out what they are. So we can guess stocks and a whole lot more. Stay tuned. We'll be right back.
Traders Nation, if you promise not to tune out, we promise not to talk about you while you're gone. Traders Nation. Traders Nation. Get Pro Online DVD Trader today. Whether you're an experienced trader or just beginning, you'll improve your skills dramatically. Click on the Knowledge Center button to order your copy today. Traders Nation, delivering what you want when you want it. Traders Nation. Traders Nation. Live.
It's on the whole time.
Bringing traders coverage of the markets, solid trading strategies, potential hot stock movers, world-class guests, informative callers, and unsurpassed market chatter for traders to take all the way to the bank.
You guys got some great stuff coming out. I mean, the great station.
Stay on top.
This is always changing. It's always fresh. Something new.
Stay tuned in. Traders Nation.
There's always something to look forward to.
Clearly, you can hear the difference. Traders Nation. It's the Traders Nation Network.
Hi, I'm Steve Forbes, and you're watching Traders Nation.
You are watching Traders Nation. Thanks for staying with us. So, Don, look at those markets, man. 600 points down again here today. We're going to be talking with Jeffrey Small today in regards to that. But, you know, fears in the market regarding the trade, trade concerns and trade relations with U.S.-China maybe coming into play here. Plus, there was a CFO from a Chinese telecom got arrested up there in Canada. Okay, apparently,
Yes.
Yeah, wanted by the United States. Not a good time for that to be going on while we're in negotiations with China. So we're going to be talking about that here today. But unaffected, Don, unaffected by the markets, because we looked at payment processors, we looked at retailers, we looked at hemp, cannabis, if you will. We looked at all these areas. But there are a couple areas, Don, that we've been focusing on for quite some time that aren't really affected here by the markets, and that's because they're on solid ground, right? Right? There's no
correct.
downdraft, Don, in these sectors. Towers is one of them. CCI, Crown Castle International. If you've been watching Traders Nation or listening to it, you certainly know about it. Currently trading at $114.01. 716,000 shares exchanging hands on this bad boy today. Up $4 since we spoke about it last time. This is that channel play, folks. And it broke above that channel. If you bring your charts up on this, you'll see this thing's in a beautiful channel. Up, down, low, high, support, resistance, right? All the way. This is classic channel play. Broke above, out on top of that resistance of that channel. Now, hopefully, that's the new support level for CCI. Don, your thoughts on all this going on?
Well, each day that goes by, we're seeing and hearing more about 5G, and that's the key to the future for these tower companies, as well as the ongoing, just regular, mundane, everyday cell business.
Yeah.
These are the companies, and I've been preaching about this for a long time.
Sure.
These are the companies that carry the traffic, and when 5G is rolled out, and it's being rolled out in various markets as we speak, these are the companies that will be right in the thick of it, and they're all prepared,
Sure.
and they've all been around a long time. They're very well capitalized companies. The barrier of entry into the business is difficult.
Yeah.
So here we have it. Crown Castle leads the pack. And we have, of course, we're going to talk about AMT and SPAC, and then we just drop down to Unit, UNIT, a relatively new player in the market.
That's right. So like Don was saying, the barriers of entry here are very difficult unless you buy your way into the area, into the space. Here's why. These are replays too, Don, because these towers sit on real estate, and that real estate is owned by these companies. Okay, think about the legacy behind this. Okay, this is an infrastructure of property that's in place for these companies. It's a huge legacy. It's like trying to compete against the railroad. Where are you going to buy land to lay track down? Right, Don? Right? Where are you going to buy land to lay track down to come in and compete in this market? So you really have to buy your way in somehow, or be a legacy company that's been established in this space. CCI, AMT, all these have been, Don.
Yeah, and as we move forward, once again, it drops down to 5G. 5G will be the big future for these companies. They'll have the legacy business of the standard cell phone, and then as we roll out the 5G technology, which most people really don't understand yet, but like I say, it is being rolled out.
Sure.
These are the companies that'll be participating very heavily in the markets, and of course, they're all testing in various markets as well. So this is something that the listeners and viewers want to keep an eye on. Of course, these companies, if you take a look at the 52-week highs on many of them, they are not that far off, which means they're not getting absolutely murdered in this market. They pay dividends, and in my opinion, these are great markets to be in.
So think about this, folks. This sector right now is not being dragged down by this downdraft of the markets, okay? Really unaffected, Don, if you will. If you look at the charts on these, okay? They're like, what? What's going on? We're busy over here getting ready for 5G rollout. They are dividend plays. They are in place. They're going to be carrying tomorrow's data and information. All right, so great place to be. AMT Tower is currently trading at $161.76, 630,000 shares exchanging hands here today, up $14 since we spoke about it last, okay? Making higher highs. Look at this stair-step climb on these charts here, folks. I mean, stair-step climb, new higher highs. Usually taking about 2-3 weeks for each stair-step to happen, and that's what's going on here. Trading above all of its moving averages, Don, AMT.
Yes. Well, AMT, this is the leader. Now, this is a worldwide company. I neglected to say that CCI is domestic only. Headquarters is right down there in Texas. But AMT, headquartered in Boston, this is a worldwide company, very heavily involved in South America and in India. So AMT is another leader in the trade. And like you mentioned, the stock's trading in here at around 161. To closer to 163. And just take a look at the 52-week highs on these bad boys. And they're not that far off.
They really aren't. They're trading right near its 52 weeks high. SBAC is our next stock on our towers list here today. SBA Communications currently trading at $166.49. 201,000 shares exchanging hands on this one here today. Up $9 since we spoke about it last. Trading slightly down today, below its 21-day moving average, but well above its 50-day moving average and its 200-day moving average. Don, SBAC.
Same leader, same thing. Leader in the trade, pays a dividend. Worldwide company, heavily involved in South America, Boca Raton based. And while the stock's getting beat up a little bit today, not that far off the 52-week high.
Hey, Don, you know, it's interesting. Some of these, like you say, South America, I mean, these have got to be some great areas for these tower companies to expand in, right? Well, look at the vastness of space, wide open space. Is anybody carrying that data in some of these countries? Is it safe to do business in some of these countries? Land concerns, etc. But you know what a great opportunity in these emerging companies, right?
Well, these companies have been around a long, long time. And so they've got the connections, they've got the sales forces in place. They know the technology in many of these countries. Then the governmental contacts come into play. So these are the companies that have been around a long, long time. And once again, we're going to have a barrier of entry as we move forward. And then, of course, in many of these countries, eventually 5G will be rolled out there. And so, once again, it appears to be a wonderful opportunity ongoing for these tower companies.
Yeah.
So it's one that we want to keep an eye on.
Absolutely. Units next on our list. UNIT here today. Uni Group, currently trading at $18.59. Lowest price tower on our list, Don. 559,000 shares exchanging hands here today. Probably the most volatile stock, but I like the charts on this. Bring the charts up, folks. Trading below its 200-day moving average, but we get good. This is like a good swing trade. If you bring your charts up on this, you'll see you get some nice swings in this stock. Historically, over the last couple months, have been very nice. Volatile, but if you can get your entries and get your exits down, you'll be in good shape. Just follow your charts, okay? You can't go wrong if you follow your charts, okay, and not your heart. All right, Don, Unit, your thoughts?
The key for Unit is their 5G technology with their small towers.
I see.
And that's what they're betting the future on right here. And like you say, not the best charts in the world.
Yeah.
A little bit of volatility into the stock, younger company, lower price stock, and there you have it. But once again, this is a little bit of a bet on 5G technology for Unit.
Okay, there you have it, Unit. Let's move on to data centers. DLR, Digital Realty Trust, currently trading at $111.76. Bring your charts up on this one. All moving averages converging, Don, right here. Second day down, though. Okay, needs to hold that 110 level, Don.
These are the companies, these REITs.
Okay.
These are the ones that will allow you to sleep at night when you get into markets like we have trading right now. Market's down 600 again today.
All right, we got Jeffrey Small coming up next on the other side. Let's finish up with data centers, Don. I think that's a good idea in these clouds. Jeffrey Small, we're going to be talking about the stock market. What does it mean to you? Is there a flight to quality? Stay tuned to find out. We'll be right back.
Traders Nation salutes America. Stay strong, stay proud, and stay in the green with us. Traders Nation live, bold, and packed for profit every weekday morning.
Traders Nation, live, bold, and packed for profit. Sign up today for our weekly HTML newsletter and check out the Traders Nation store for products to enhance your stock trading day. Traders Nation, what you want, when you want it. Traders Nation.
Hey, Jeff Carlisa here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuned in to Traders Nation. My pleasure to have back with us once again Jeffrey Small. He's president of Arbor Financial and author of Turning Financial Planning Right Side Up. Jeff, welcome back to Traders Nation. How are you today?
Hey, Kurt, I'm doing great. It's so great to be back again.
Yeah, always a pleasure, isn't it, Jeff? Hey, listen, second day in a row, look out below, man. I mean, what's going on out there? Stocks fell sharply again today, down 600 points at this point. Is it fears over the U.S.-China trade relations is what I'm kind of reading and hearing?
Well, there's no doubt that those are impacting the market, but what really freaked the market out this week was the partially inverted yield curve we had between the 5-year and the 10 years. The 5-year started paying more than the 10-year. And normally when we have some type of an inversion like that, we're looking at a recession within 6 months to 2 years, which I suspect is going to happen much quicker. But that's what's really rattling the markets. If the yield curve is going to continue to flatten and potentially invert, the volatility will get worse.
Yeah, you know, I've been seeing a lot about that, and I know, and the first thing that comes to my mind is our discussions we've had here on Traders Nation in regards to flattening of that yield curve. That's a big problem, right?
Well, it really is, because it disincentivizes banks to lend.
Yeah.
So if lending slows down, hence the economy loses momentum, because we're in a credit-based economy.
Yeah. Yeah, and I remember way back when, and listen, I'm telling you right now, my credit score is 800 plus, personal and business-wise, right? And I remember last time that they started restricting the credit and contracting it. For instance, well, I shouldn't probably mention them, but huge. I had like a $55,000 credit line, right? And you're like, well, you're into us for about $8,000 right now. Instantly, my limit was that until it was paid down. They restricted credit, very bad for business, and I was not a risk. Are we looking at that?
Well, we're not looking at that yet. They're actually lowering the barriers for credit, and they're giving people credit that probably shouldn't happen. So, just to keep the party going right now. So I think at some point, though, the yield curve is definitely going to impact what's happening in the markets. But more pointedly, Kurt, you know, we hit an asset high in October 1st. We had $100 trillion of household net worth in real estate and stocks. It turned out to be about 510% of nominal GDP as a percentage. And when you get, that's the highest in history we had. Okay, that's the highest.
Yeah.
The next highest was in 2008. We were at 490%. So we're now going to go through a reversion to the mean. Things are going to go back to the long-term averages and asset prices. Since World War II is about 320% of nominal GDP to household net worth as a percentage.
Okay.
And so we're on our way back to that point again.
Okay, so reversion to the mean, if folks don't understand what that is, briefly, what would that be?
Well, going back to the mean is averages, and a reversion means we're reversing.
Yeah.
And so we're going back to the long-term averages of what asset prices should be. And otherwise, asset prices in real estate and stocks are too high, so they have to go back to the long-term averages. And so we're going to see a 30 to 35% drop in the markets. That's going to be a very slow and steady decline over a period of time. We're in a very 2000 market where the market dropped 10% only in that year, but there was still lots of volatility. That's kind of the market that we're in right now.
All right, so does that mean the slow and steady house of pain, or does that mean slow and steady we can readjust our portfolios and get to a flight of quality?
It's going to be a slow and steady house of pain.
Okay.
And I hate to say it, I'm not a perma there. I would love to say the markets are going to explode from here.
Sure.
But we hit the second highest valuation in history on the CAPE index, and the reality is markets really can't get any higher based on the metrics that we have today. The demand is just not going to be there. And besides that, Kurt, the global markets are in the tank, man. I mean, if you look at what's happening in the global markets, if you go to Google and Google global stock market performance 2018, it's negative. Every market's negative for the year.
Right.
For the year.
So is the United States market, is this a trailing trend? Are we trailing behind these global markets, or are we just unique away from them and we just got our own issues right now?
We're really the bright shining lights, and as far as the global markets go. And so I don't know if the global markets will be enough of a contagion to pull us down.
Okay.
We have our own issues here, but yes, we are gonna go backwards from here.
All right,
we're not going up.
I want to talk briefly. Last night, at one point, the futures trading on the CME halted over a sudden plunge. It's all over the news this morning here today. It's being reported that it's arrest of Huawei's CFO arrest in Canada, which I guess the United States has this arrest warrant out for the CFO of this company, telecom company. Again, I'm getting back to the geopolitical part of concerns that are out there. Is it just speculation at this point in regards to U.S.-China relations?
They punted for 90 days to try and come up with an approach that's fair on trade. And China is predatory. They shouldn't be taxing everything that they import from us. They marginalize our ability to access their markets, and they steal our technology. Yeah. And so we have to take a very strong stance towards China. I agree with that position. Yeah. But it's going to cause some growing pains in the global markets. Right. And China's going to take a long-haul approach, Kurt. They're going to wait Trump out. They're not going to give him any concessions. This trade dance is going to last for the next couple of years. It's not going away.
Yeah, I think, and with the deals that President Trump has done in his lifetime, okay, not just talking recently, I'm talking lifetime. He's a deal maker. This guy is, okay, and very smart. And I think he's going to negotiate, if possible, with China. Probably the best deal that we can even squeeze out of China, if successful. Your thoughts?
Well, I'm all for that. But, if you look at the report today, we hit a record 10-year high on trade deficits. Right. The trade deficit rose $15.5 billion in October, which is the highest since 2008. So, the intention is well and good, and, rebuilding America and putting America first is all well and good. Yeah. But that's not what's happening. That's not what's going on in the real world right now. We're importing more than we're exporting at a record pace.
All right. So hopefully we can fix that, because I haven't seen anybody been able to do that, and it's still not to be proven yet. Okay, with as much volatility that we have out there in the market, should folks be looking at or considering? I know they always should be, Jeff, considering readjusting their portfolio, maybe even a tightening up. But is there anything that folks should be doing right now? Is this just a flare, a friendly reminder that they should be tightening their portfolio up?
Well, there's no doubt that there's going to be a flight to safety here. It's occurring. I mean, the reason why we see so much volatility in the market is because a lot of investors are panicking and liquidating, and they're getting out because they have, post-traumatic stock market drop syndrome from 2008 and 2000 to 03. So, yeah, people should not have any risk right now. If you're going to live off of your earnings in the next 5 years of your portfolio, you should have zero risk today, zero. But if you're going to accumulate for the next 10 or 15 years, then you can ride it out.
Right.
And so it really depends on what your situation is, Kurt.
So it boils down to you should already have a plan in place. And if you have that plan in place, you should be protected by all this volatility that's going on right now. And if you don't have a plan in place and you're affected by this volatility, that's the reasoning why, right?
Well, that's correct. And so it's very interesting that Powell, the president, the chairman of the Fed, came out and said, we think that we're close to neutral now on rates. And so, if rates aren't going to go up anymore, fixed income is going to look really attractive again, because if rates have peaked, we're going to zero on interest rates by 27 to 36 months because the federal debt service doubles with just one more rate increase. We ain't got the money. We're out.
Yeah.
We're broke.
How do you think 2018 is going to end? It's not that far away, but how do you think?
Well, I think we're going to be negative for the year. I think the volatility is going to continue. The jobs number just came out on ADP. We're at 178,000 last month. That's not a screaming economy, even though everybody has demands for employment. They can't find people to work that are qualified.
Yeah. Is that going to go into 2019, your thoughts?
I think 2019 will be also a negative year of 10 to 15% if the yield curve continues to flatten and or invert. So investors want to watch if short-term rates are going to start paying more interest than long-term rates. And that is always indicative the last 13 times of a recession. We've had 10 out of 13 times a recession within 6 months to 2 years.
Yeah.
And I think we're kind of running out of gas, Kurt, on this Trump optimism a little bit as far as the economy goes.
We're out of time. Where can we find you?
Go to arbor-financial.com, and they can follow me on Twitter and also LinkedIn.
Always a pleasure. Jeffrey Small, president of Arbor Financial. Head on over to his website today. Stay tuned. We'll be right back. Welcome back. You are tuned into Traders Nation. Don, I gotta let people know that interview. Okay, if you miss that last block, that last paragraph of comment from Jeff, you've got to catch that rebroadcast of Traders Nation or check out that individual interview over at tradersnation.com or YouTube. Everything about that interview is very important for your financial future. You should listen to that whole interview once again, maybe twice again, Don, because that interview is just absolutely packed with information on what's going on right now and how to protect yourself, no doubt about that. Don, we finished off with data centers. Your thoughts on that, with the final remaining moments we have here today?
Well, the data center is another business similar to the tower REITs we talk about. These are REITs. Data center business isn't going away. Many companies are getting more into the cloud. These are the companies that store the data. We've talked about them now for months. They pay a dividend. Barrier of entry is difficult. It's not so easy to go out and build a multi-billion-dollar data center.
No, not at all. Yeah, and the data centers are getting huge. Why? Because the amount of data that's being stored is getting huge. It just is compounding, Don, at an astronomical rate. Don, do you own anything we talked about today?
No.
All right, I don't either. These aren't buy or sell recommendations at all. We do appreciate you tuning in to Traders Nation. Catch Don on all the Facebooks, Twitters, etc. See you on the next edition.